let's talk about what is called a reciprocal range play. And this is one of the most important plays that are out there in the market, and you should know about this pattern. This is a very important pattern, and this is something that you should look for. And this is not really rare. I don't usually look for it, but when I saw that happening today in D, it was very clear to me that we had to take this trade. So again, looking at D Dominion, let's first take a look at the daily. First, what we see at the daily, Dominion is very strong, so it's holding right over here. And by the way, if you take a look at the daily, it's maybe just breaking up to a new high, and that's a good plus. So when you're looking at Dominion doing what it's doing right now, and you're thinking there's a good chance of a new high and a continuation, so from the point of view of the daily chart, it does look great. So that's one plus for Dominion. And then you take a look at yesterday's trading range, and what you see in yesterday's trading range, it didn't really move that much, so it was quite stable. So if you look at the fair value of yesterday, what would you say is the fair value of yesterday? And by the way, it's called the pivot point. You don't really need to post the pivot points at around here, but I can tell you for sure that yesterday's pivot point, without even taking a look at it, is somewhere around here, which is 67. So if you take a look at most of the day, most of the trading session yesterday, and this is it somewhere around here, then you can see that it moved around this 67 level most of the day. So most of the volume was anywhere below or under $67. And this is very, very important. One more thing, $67 is a round number, and we all know that there is a resistance in round numbers, and we all know that there's a good chance that when you're seeing a round number break over, then usually there is going to be a continuation. So if you're watching Dominion today, you're seeing something very interesting, of course. It has started low. So the start of the day today with Dominion is over here, 65.60. Why did that happen? Anybody has an idea why did that happen? Guys, why did it start low? I mean, it's strong. Let's take a look at the daily. It is strong. Why would you say that may have happened? Earning report? I'm not even checking that out. I don't think so. Could be, by the way. No, I don't think so. If it had that, probably it wouldn't have moved up that much, or probably moved down a little bit more. Double top Darcy? No, I don't think so. That's very simple, guys. The market started today 1% down. We had a gap down in the market, and here's the market. The market started today, gap down 1.2%. So almost everything starts lower. And Dominion just started lower with the market. So what I'm thinking to myself, it's looking strong on the daily. It is probably strong. There are probably a lot of buyers. Look at yesterday's move, and again, yesterday's move around here, that was the what we call the pivot point. And again, I don't even have to post the pivot point to know that it's at around $67. It's what is called the fair value of the stock yesterday. Half of the volume above, half of the volume below, and I'm talking about the last hours of the trading session, which is more important to me than the first hour. And then I'm thinking that's the price where most people bought, average price where most people bought it yesterday. Okay, so it starts down, probably because of the market, and then look what happens just at the first few minutes. That's 5 minutes candles over here. It pops up and it moves like crazy all the way up here. Now we all know that gaps are being closed throughout the day, usually at the day that they happen. Like today, Dominion gap down, and today it has closed the gap, and real quick. Now this usually is happening because of the institutional funds, and the reason is there are several reasons, of course, but the main reason is somebody had to buy Dominion yesterday and it just didn't complete the work. So if institutional trader is buying Dominion yesterday, and let's say he was told to buy 500,000 shares yesterday, and it gaps down today to 65.60, which is like $1.50 lower than the pivot point over here, then guess what? He's getting a lot of bonus if he's buying it over here. So the price that he's buying, when he's buying low, the price that he's buying it, if he completes his, let's say 500,000 shares that he was told to buy, if he completes it lower than the pivot point of yesterday, then that's a big bonus for him. So this is really the reason why a lot of shares are moving into the direction of closing the gap. So when you're seeing a gap down, like the one that you're seeing here, then usually the price moves up because of the institutional players who are just being paid to do so. And that's it. There's no other thing. So Dominion has moved in that direction, and it was very, very strong. Now, we all know that usually gaps are being closed, but we also know that when a gap is being closed, that's at $67 around here, then usually what you're supposed to be seeing is a move down, meaning, okay, we closed the gap, we're not getting any more bonuses, and I'm thinking in a way that institutional players are thinking. So I'm thinking to myself, probably it should pull back down. And some of you guys in the room asked me whether we should take a short right when it closed the gap over here. And again, we looked at the market, and the market, of course, started lower. And when I'm looking at this 5-minute candles here, then that's probably this point, something over here of the S&P 500. Anyway, I said no. I said, I think we have a reciprocal range play over here in D, and let me explain to you what is a reciprocal range game. So the play goes like this. When you're seeing a big move up, not just a slow and, like the S&P 500, for example, it is slowly moving into the direction of closing the gap. It's moving up and down and up and down and up and down and up, and maybe it will close the gap. So that's a slow move in that direction. I'm not talking about something like this. I'm talking about something like that. Watch Dominion and see, this is 5-minute candles over here, and it was really, really quick to move into this $1.50 move right over here into $67 and close the gap. When you're seeing something like this, you don't want to be shorting it at the moment where it closes the gap. Something else, maybe, but when you're seeing something as strong as that, you should usually consider it to be a reciprocal range play. Now, reciprocal range play means that you double the move, meaning it started at 65.60 and it moved all the way to 67. That's $1.4 move over here, and now you take another $1.4 up, and that's 68.40. And guess what? The high of the day right now is 68.23. Now it doesn't, of course, have to be exactly 100% right, as I mentioned right now, but that usually is the game. And there you go. That's your $1.4 move here and $1.4 move there. So Dominion D was a valid trade, and you just to remind you, I posted that in the room today. So when you're seeing here it is, D over 67, and we traded D over 67. It was a great move, one of our good trades for the day. So again, we just spotted the $67 point. Let me take you back to 2-minute candles or even 1-minute candle. Let me see if we're seeing anything more interesting here. Yeah, okay, this is great. Take a look at the $67 point right over here when it closed the gap. Now, this is an absolutely amazing technical formation. Yes, you could think about shorting it. No, I said I'm not going to short it. I'm possibly going to long it. So the long was over 67. Now we're combining a few things here. We're combining the fast move up, a lot of momentum in that move, as I mentioned earlier. A strong move on the daily, meaning it is a strong looking stock, and the fact that it was topped out at $67, which is a round number, and you're expecting a breakout over the round numbers. So everything played into our favor. The reciprocal range play, which we now know what we expect to do, and a very nice technical formation right over here, exactly where the gap closes, and again, 2 5-minute candles over here. Hold on a second. There it is, 5-minute candles. And so we had a nice breakout formation over 67, and we took it all the way over here. That was a 50 cent, approximately 50-cent move right over here. It was a very, very nice trade, and by the way, continuation. So I can tell you that I played it as a day trade, so I only enjoyed this part. I did not enjoy that part, but anyway, taking it over 67 was taking into consideration that it will continue on moving from the reciprocal range momentum higher. It moved just $0.50, but that was good enough for me to trade. Now, just think about everybody who's involved in this trade. Just think about the people who are involved in the trade. Think about, for example, the players who shorted it at 67. Now, some of you guys mentioned in the room that you want to short it, and I said no, but there will be other players somewhere around the market who will short it at 67. Now, think about somebody who's shorting Dominion under 67 at around 67, hoping it will continue lower, and think about this person who sees Dominion moving just a cent over 67. And let's just move back to hold on a second. Let's just move back to the point where it broke over. So think about this short seller who just shorted it somewhere around here and hoped for a move down and saw it moving over 67. What will this guy do? He's probably going to close his shorts. So he's done with it, and he's going to move out, and closing the shorts means it's going to pop up. This is what we enjoyed. Think about a person who bought it down here and thought he should probably sell at 67 because it has just closed the gap, and maybe he sold it at 67, and then he watched it moving over, and he was very, very sorry that he didn't hold on to his shares. He's probably going to be a buyer here. He's probably going to buy something. And again, when you look at all the market participants, you should probably think that most of the people would like to long it over 67. And again, that is valid also when you're looking at yesterday's formation, because what you're seeing over here is a lot of people who bought or sold Dominion or shorted Dominion at around the pivot point, which is at around $67. So think about the average over here. There's a lot of people who played both sides. Think about, again, the average is 67. Think about those people who shorted it yesterday at around 67. Now, by the way, the market is moving down in the last few days, so it's a good idea to short something that moves up, like D. I'm not saying I was one of them, but I'm telling you that there must have been a lot of people who shorted it yesterday. Think about this person who may have shorted it yesterday and watched it move over 67 today. What should he do? Shouldn't he close his short? Probably yes. So again, the pivot point, yesterday's pivot point, is also an important part of what we have seen in Dominion today, and the fact that Dominion just about to complete its reciprocal range play is very valid formation and a very nice trade to take, and we did enjoy that today. So we're having a green day. One of the reasons is Dominion today, and it's a nice trade with nice formation. Okay, that's about it for this lesson. Hope you understood and liked it, and I'll post it in the room anyway, in the YouTube channel anyway, so you can listen to it later if you like. Any questions about this? I see that you had quite a bit of questions here, so let me just go back and see what you've asked.